Well, welcome everybody to tonight's session demonstrating one of the tools for portfolio decision making at Manifest Investing. Ken Kavula, my good friend, is going to be spending the majority of the time with an example or two, giving you kind of a roll up your sleeves demonstration of what we lovingly refer to as our sandbox when it comes to taking a look at options and alternatives for a portfolio decision. And yes, that could involve a sale. So again, this is one kind of an example of one of the sessions which we may do a little bit more of, sessions where we'll take a feature or some topic that you guys want to talk about, and we do record these sessions so you'll be able to catch up with them on your own time. But again, this notion of a clubhouse, and again, we know this isn't just for clubs, although we know so many of you in the audience are parts of investment clubs, and of course we do consider this entire thing to be one big community. I'm going to do a quick disclaimer for tonight. Again, keep in mind that no investment recommendation is intended. I'm pretty sure Ken's going to show you a current real money portfolio, and he's going to talk about real companies in real time. Everything's for illustration and demonstration, and again, do your own homework, please. So again, I'm going to turn it over to Ken here in a second, but really what it comes down to is many of our subscribers, especially those in investment clubs, do find that these worksheets, these what-if worksheets, tend to be fairly powerful areas to explore the possibilities and, again, play that what-if game, the sensitivity analysis, whatever you want to call it. But Ken's going to actually demonstrate that. So Ken, with that, I think I'll go ahead and switch control to you. And why don't you take it away?
Thank you, sir. Well, hello, everybody. Glad to be with you this evening. It's still cold here in Michigan. We're going to be down below zero with wind chill again tonight and for the rest of this week. And I hear that they're calling for a big snowstorm again this coming Monday. That would be March 3rd. So I'm going to hunker down. It's my habit in January and February and March and the first quarter of every year to take a real serious look at all the portfolios that I invest in and to rebalance them, to do some selling, to do some buying, and to make sure that I still like the long-term prospects of the companies that I'm looking at. I learned that habit from my investment club called the Wolves. We've just celebrated our 20th year as an investment club. We're 15 members strong and show no signs of giving up on investing or throwing in the towel. We're very pleased with our results. Our relative returns beat the market on a regular basis, and over the last 20 years, our 20-year record has been beating the market. Tonight, when we looked at it, we were beating by about 2.5%. That doesn't sound like a lot, but when you compound 2.5% better than the market year after year after year, you really are generating some nice returns. This is our actual portfolio for the Wolves, and I'm going to show you what we did tonight. Now, we meet in a stock committee, which is a subset of the entire membership. That committee has met 3 or 4 times to make some recommendations to the entire club. Then the entire club met for a couple of hours this evening to look at those recommendations and then decide which one of those they were going to act on and which ones they weren't. And the worksheet that accompanies our dashboard played a pivotal role in what we were doing. So let me start by telling you that we always begin our worksheet dashboard work by looking at the dashboard sorted by potential average return, by par, and we always focus at the bottom of the columns. We're looking for numbers that we've set as targets, and we hope that those targets can be met week over week, month over month, year over year. I'm going to start with par, and we'd like our target par to be about 5 points better than the market. Well, up here in the corner, I can see that the market par this evening is about 5.7%. The average stock in the database that we're looking at has an average return on a typically done SSG of about 5.7%. That means that we're shooting at about 10.7%, and if you'll notice, we're about 0.5% shy on that number right now. So one of our goals in the next 6 or 8 months will be to get this number back above and into the sweet spot. Our quality is great at 91. Our goal is to keep it at 80th percentile or better. Our financial strength and earnings predictability, our goal is to keep these numbers at 80th percentile or better, and we've done that. We don't focus too much on yield or on total PE for the portfolio, but we do focus on the growth in sales for the portfolio, and our goal is to keep our sales growth somewhere in the 10 to 13% range. We're extremely happy with 11.5%, although traditionally this portfolio has average sales growth of a little bit closer to 12%, maybe about 11.7, 11.8, something along those lines. So tonight we were listening to our committee, and our committee told us a few things that we were very concerned about. First of all, the committee brought to our attention one of the stocks that we own that's a Chinese stock. It's an ADR. It's called NetEase, N-T-E-S, and they made the comment that there was an extremely negative earnings call on NetEase reporting the last quarter's earnings, and they wondered if this stock hadn't lost its way and lost its core customer. We had a long discussion on that, and you don't have to agree with us, of course, but we did decide to consider a sale on NetEase. We then looked at IPCM, who in the last 6 weeks or so has come under investigation by the Securities and Exchange Commission for the way that their doctors are doing some of the billing for this company. We don't like to own any company where SEC investigation crops up in the news. We've learned our lesson a couple of different times from various stocks that we've owned, and so we've set IPCM as a possible sales for our club. The third one that we looked at for a possible sales is a community favorite. It's FactSet Research. And we don't see anything fundamentally wrong with FactSet, but we're concerned that FactSet's clients, the people that would buy what FactSet has to sell, that client base is eroding. The sales growth, especially new sales, are eroding. They're down to around 5 or 6%. And while the long-term prospects, and I'm talking 5, 6, 7-year prospects for FactSet, appear to be pretty decent, our club was concerned about the next 2 to 3 years and wondered if we couldn't perhaps do better in the next 2 to 3 years with the $16,000 that presently is invested in FactSet. We have a handsome capital gain on FactSet, and we just decided that if it's going to stay at about that price for the next year or two, that perhaps we might find a better place to put that money. So with all that in mind, we set to, and we ended up the meeting, we have $2,762 in cash that we can invest. Add to all that other stuff the fact that we have a partner that is celebrating his 30th anniversary. His wife just turned a milestone number. She just turned 50, and they're expecting their first grandchild, and they celebrated by a purchase of a wedding ring more in keeping with their success at this time in their life. He's asked for a partial withdrawal, and we're glad to give him the money. After all, what do you invest for except to have some money to spend occasionally on something that is completely unexpected. So we have all those things to think about, and the first thing we did was we took our dashboard, and over here you'll notice that one of the things we can do is we can copy a dashboard to a worksheet. When I copy a dashboard to a worksheet, I don't change anything in the dashboard itself. So the dashboard is sitting there, nothing changes, none of the numbers changes. I don't have to remember everything I did and then go back and put it where it was. I can go to the sandbox, I can play with various combinations and considerations, and then when I'm all done, if I like what the worksheet looks like, I can use the worksheet to replace the current dashboard. I also have some other possibilities. So I'm going to copy this to the worksheet. And if you give my computer just a moment, again, I'm going to sort it by par. And I'm going to notice that it basically looks just like the dashboard right now, except some symbols have shown up. Next to every single one of the shares numbers, a little pencil has been created. Next to cash, another little pencil's been created. Next to each company, I have a green button that if I hover over it, it says make this company inactive. And I have a red button that says delete this holding entirely. So the green, make it inactive. The red, delete the holding entirely. Some of you might be wondering why I have companies on this dashboard that show no shares. Hills Healthcare Services Group, here's Portfolio Recovery, and Computer Programs is down here. These are companies on our Pounce list. And since they don't carry any shares, they don't come into play when I'm doing averages for the entire portfolio. 0 shares in a company contributes 0 to the portfolio averages. So it's a really nifty way to maintain your Pounce list on the dashboard without having to mess up the averages that are so important to my club in keeping our total return above the market return. Well, let's see. We thought that we might like to sell NetEase. So I'm going to take and I'm going to make NetEase inactive. There it goes. It's no longer on the dashboard, but look, it's now beneath the dashboard, sitting down here, and the $13,300 that the company was worth at the very end of the trading day today has now been added to the cash that we have in our portfolio. Remember, we started with about $2,700 in cash. Well, now we have a little bit more than $16,000 in cash. We also thought that we might want to sell IPC the Hospitalist, so I'm going to make it inactive. It's disappeared from the dashboard. Here it is at the bottom of the worksheet under Inactive Companies, and my cash has moved up now to over $40,000. Let's decide that we wanted to make Gentex inactive. So I make it inactive, and it appears down here. The cash gets added, but then we have a long discussion, and it turns out that we weren't talking about Gentex to make inactive. In fact, we were talking about FactSet. Well, I'm going to come back here because now the green button on an inactive company, the green button allows me to make it active again. So I click, it disappears from the inactive sheet, and here it is up here back in the active part of the portfolio, and the cash is down to the $40,000. Let's find that FactSet, and let's make it inactive. Well, here it is at the bottom. Here's the cash. It's moved up to over $56,000 right now. And at this point, in our club meeting just about 2.5 hours ago, there was a motion. And the motion was to sell NetEase, IPC the Hospitalist, and FactSet. Now, folks, this wasn't just something that we did after a 8-minute discussion. There was considerable time spent on coming up with reasons why we wanted to sell, supporting the motion to sell, and then making sure that everybody in the partnership understood exactly why the sale was going through. Well, now we had the pleasant task of doing something with $56,000. We're in the middle of 2 industry studies right now, and at our next club meeting, we'll be presenting as many as 7 or 8 stocks for consideration in addition to our Pounce List. Now, it will be, it'll be rare if more than 1, maybe 2 stocks off that list makes it onto the Pounce List, but we will be presenting industry studies that compare stocks to their peers, and we'll be deciding if any of the stocks are going to make it to the Pounce List. One of the industries we're studying contains Visa and MasterCard. That's the asset management. That's the wrong industry. Visa and MasterCard is in the industry study, and we're going to be looking at that particular industry. But let's get back to this dashboard here, okay? Our next question now was, how are we going to spend the money? Remember, we wanted to reserve some cash for a payout. We wanted to reserve some other cash so we had a little bit of money to play with next month when some new stocks came to our notice. So we started by looking at our smallest holdings. And since we're interested in holdings that are in the buy zone, we know that stocks with a green background up here or with the yellow background are most likely in the buy zone on our stock selection guide. So we brought up our SSG of the fresh market. We liked our SSG. It was within 0.5% of the manifest par, our par number was. We felt very comfortable with our SSG, and the motion was made to buy 162 shares of the fresh market. Well, 162 plus the 138 that's there already gives us 200 shares, and we make the edit. Sorting by par again, I notice that the French market has now jumped to about 1.3% of the total portfolio, and our cash if Mr. Kavula could add, we'd be all set. We have 300 shares now, not 200. And when I sort by par, you'll notice that fresh market is up to about 2% of the portfolio, and our cash has been reduced. Our next motion was to add a little bit to our holdings in Fossil, F-O-S-L, and the motion came to sell 80 shares of Fossil. Notice that when I sort by par, Fossil has now, oh, come on, I'm
You said sell, you mean buy.
because I want to buy and I forgot to make it 150, so there we are. Here we go with par.
You're just making sure we're all paying attention, right?
I know, and here's the percentage of total, and again the cash is reducing. The next motion came to add 105 shares to Schlumberger. So again, here's SLB. I'm ending up with 200 shares of Schlumberger. Sorted by par. And you'll notice that the cash has further reduced itself. And the last thing we did was we put 400 shares into play on Healthcare Services Group. Again, par. Again, checking our cash. Well, that left us with $21,000. We have a member to pay off. There'll be plenty of money to pay for the gift that he gave to his wife, and that'll leave us with a little bit of money just to play with at our next meeting. It'll leave us with $12,000 or $13,000 to play with at our next meeting, plus whatever we brought in this evening in contributions. The worksheet is so useful because it keeps track of our cash, and in addition, it keeps track of all of our averages that we're trying to use as a target for our portfolio. Now, somebody might say, well, I thought your target was to raise this number right here. Remember that I have $21,000 in cash sitting right here. That's about 4.2% of the portfolio, and that's at a 0% par number. The very last thing that we always do before we get out of a worksheet, in our club at least, is we edit the cash. We edit it down to 0. That doesn't mean we give it away. It just means it's not on the worksheet. And now we're getting a true par value for our portfolio minus the cash. We did raise the portfolio's par 0.1% from 10.2 to 10.3. We'll set a short-term goal in the next 6 months to raise that all the way back into the sweet spot. We didn't mess up this number. Our target of 80% was preserved in these two values, and our growth stayed at 11.5%. Another short-term goal for this portfolio will be to raise the growth just a touch. We're more comfortable around 11.7, 11.8. But all in all, we think we had a pretty decent time playing in the sandbox. Here's where everybody makes the biggest mistake now as they play in the sandbox. They blithely go on their way, closing manifest down, forgetting that this is a worksheet. You have one more step, folks. If you want to save the worksheet before and after, then you have to hit Save to New. If you want to use this worksheet to replace the one that was there at the beginning of the evening, then you want to save to Original. That's what we want to do, so I'm clicking Save to Original. The par is here. We will follow this now. We'll check it out during our meeting without cash, and then right before we begin the process of buying and selling, we'll add the cash back into the portfolio so that we can play with it in the sandbox. It's kind of a dazzling, quick, this, that, everything else demonstration. So maybe I can answer a few questions, and then maybe if people want to see another worksheet, we'll pull up one more and take a look at it. Mark, are there any questions?
We're actually not showing any questions right now. The floor is open if you want to text in a question on the question tab. And the floor is also open if you want to raise your hand and actually use your microphone. But thanks, Ken. Some interesting stuff there. You might, while we're doing that, Ken, you might use the show charts function just to show everybody a quick look at the sectors.
One of the other options you have up in this corner is show charts. And when I show charts, now I get some sector diversification down here at the bottom. We're operating in the wolves under a long-term goal to reduce our tech holdings just a little bit. Actually, the goal, as stated, is to don't buy any more tech until you buy some other stuff. And we're actually taking a serious look at energy stocks, trying to beef up our energy sector just a touch. We're pretty happy with the holdings in the rest of our sectors, although we wouldn't be afraid to add to any one of those sectors except maybe tech, and we would even consider a tech addition if it were compelling. We're also looking at our size diversification. Now this is by sales growth, not by amount sold, but companies that sell in the 7 to 12% range, we'd like about 50% of our portfolio there. Look at that number, 46.9. That's pretty decent. We'd like about 25% of our companies to grow faster than 12 and about 25 to grow less than that 7. And we don't become OCD about this graph at all, but we do keep an eye on it. When it looks like this, we're very, very happy. It shows us, in fact, that if we do find a great blue chip company, there's actually room for it. A really big, slow-growing blue chip, there's actually room for it in the portfolio. And those companies right now, there's an awful lot of those large, stable blue chip companies growing at less than 7% that are still on sale, even from the recession. So we might be looking at that kind of company to add to our portfolio in the next couple of months. Mark, I noticed the question bar shown up here and everything.
Yeah, Ruth Wilfong would like to know, how do you add the cash back? Can you demonstrate the actual
sure,
process?
That's very easy. I have a couple ways to do it. I can go back to a worksheet, but the easiest way that I've found to add cash at the beginning of the process is to hit edit. Once I hit edit down here at the bottom, up here at the top, there's a place where I can put cash. What did we have? About $22,000 in cash, something like that?
Yeah, including the gift.
So I put the cash up in there. I might take the gift out of that because it's already spent. I might take the $8,000 out of there. So that leaves us about $14,000 to play with. Now when I submit it, now the dashboard, when sorted by par, gives me $14,000 in cash right here. And I'm ready to go back right now and copy to the worksheet. And what I have now is that exact same dashboard, only now I can play with it. Remember that if I just leave the site right now, this will not replace the original dashboard that's on the site. What is nice, however, is that I could leave the site right now, this instant, and come back in a week, and I could view the worksheet. And if I haven't brought up any other worksheet, this worksheet would still be there. There's always one worksheet in your workspace, and it's the last one that you looked at. That's the worksheet that's going to be there. I don't have to save to original in this case because I really haven't made any changes, but I will hit save to original.
Nick is asking, could you
back to where I was. Go on, Mark.
Nick is asking, can you print that and give it to your treasurer for transactions?
Sure. I can print anything on the Manifest site. Can I print exactly what I added? No. The treasurer has to make some deductions from what's actually there. That might not be a bad function to add in the future, Mark, to show off to the side what the changes were, but I'm not going to mention that to Kurt because he'll probably send something electronically through the mail and zap everything I own right now. He's pretty busy.
No.
But I can print whatever I want. I just have to right-click anywhere on a page in Manifest and then hit print, and I will in fact print the entire page. In this case, I'll print the entire worksheet. Since I'm showing the graphs, they will also print as well, along with the legend. It's 2 pages out of your printer that would come out.
Brad Young would like you to explain why PRAA, Portfolio Recovery, doesn't show any shares.
Sure, I'll go through that again. we like to keep our Pounce list on the same dashboard as our actual holdings. So PRAA, along with CPSI, FFIV, Neogen, Chipotle, and O'Reilly, excuse me, those stocks are on our Pounce list. Now, they have 0 shares attached to them. That means they don't impact our averages here at all. They don't change our averages one bit because 0 shares adds 0 to the weighted average. Only the companies that have numbers attached to them impact the averages at the bottom of the columns that we keep a close eye on. But keeping our Pounce list here keeps it in front of us and also keeps us remembering which of our Pounce list might be moving into the buy zone. If you notice, most of our Pounce list is out of the green, and it's also out of the buy zone on our SSG. In fact, our SSG for PRAA, while it gives us a par value, almost exactly what manifests is, also gives us an upside downside of about 2.8, 2.9 to 1. So even though it's green in the background here, our discipline as better investors would be not to add to PRAA until it actually said buy on our Pounce, on our SSG. We use Manifest as a complement to the better investing method. We think it complements and gives us validation and confirmation of what we're doing on our SSGs. But we also think the most important part of Manifest is it keeps us looking forward. It keeps us focused on par. It keeps us focused on Section 5 of the SSG, where most folks in most clubs are focused on Section 4, where it says buy, hold, sell. We try to focus ourselves on return because that's what actually makes you the bucks when you're investing.
We have a question here from Ann Cantrell. She's a relative newcomer, and she's wondering about starting with the creation of a dashboard. Could we do a quick creation of a dashboard?
Absolutely. It's so easy. Okay, I'm going to go up to my dashboards right here. I could have also used Dashboard Home. They would have got me to the exact same place, either Dashboard Home off to the right or My Dashboards. And right here, you see that I have lots and lots of dashboards that I follow. But if I want to add yet another one, and I'll name it Ann's dashboard. Was it Ann, Mark? Is that her?
Yep.
Is that who we had? Okay, so we'll call this Ann's dashboard. And let's say that Ann had $3,000 in cash. She's a beginner, so we won't make it public and we will not publish it. But let's put a few stocks in here. Ann owns Priceline. She's lucky enough to have bought Priceline. She has 10 shares of it. And at this point, I hope you can see the logic in what I'm doing. Maybe 250 shares of Abbott Labs, maybe some Apple. And I can keep doing this as long as you can keep up with me. Maybe some Cognizant. Whenever I'm finished with my holdings, I come down to the very bottom and hit Submit. And at that point, up pops Ann's dashboard with the stocks that I've purchased. Boy, this is a pretty nice dashboard here, Mark, you know? Okay. I'm also looking at my diversification, really heavy in tech stocks, obviously, but you know, a fairly decent division here, although I'd like probably to focus as I add more stocks. I would stay away from tech, and I'd focus on some more medium-sized stocks growing in that 7 to 12% range. I have a little bit more risk in this portfolio than I like with this 60% devoted to small companies. And there's one other way that you can create a dashboard. I'm going to back up here, and I'm going to go back to my dashboards yet again. I'm going to add another dashboard, and let's call this one Ann's second dashboard. And notice down here, after I've done the place, and by the way, if I don't want it public and don't want it published, I can do that. We'll get into these buttons at a later date, okay? But down here, if I happen to have equal weights of everything, let's say I wanted to follow some companies, so I'll put $100 of, let's put $1,000, let's put $10,000 of each company, and let's put some tickers. Here's Priceline again, and Cognizant, and Apple, and I forgot the other one I bought, Abbott Labs. There's those 4 companies yet again. This time, instead of putting in a specific number of shares, I gave them an equal weighting, hitting submit, and now the computer figured out how many shares I could buy with 10,000. What is this so nice for doing? Well, I'll tell you that a month from now or a year from now, I'm going to be able to see what the relative growth has been in this portfolio. A year from now, if this is at 15,000 and this is at 6,000, I know that I started this portfolio with $10,000. If I don't remember that, I could put that in the description. Each stock started with $10,000. Okay?
I usually date that too, just for kicks.
If I could spell started, and I could put in the date. Today is the 25th. Of February, and again I could submit that, and that comment now appears underneath the name of the dashboard, and this is a wonderful, wonderful way of tracking a portfolio over a relatively long period of time. We get really involved in stock contests up here in mid-Michigan, so it's a great way to track contest portfolios as well, to see how well, or in my case, how badly I'm doing in certain contests. But creating these dashboards is a very fast, easy way to create the chart, and then monitoring the chart. Remember what I'm looking to do. I'm looking to keep certain numbers in certain target ranges. We'll talk about that at a later club corner as well, I think. Mark, any more questions about the worksheet itself?
Yeah, one of the things she also was curious about is there a tutorial for what you're showing here? And if you go into events, you might have to scroll down a bit, but there is a couple of sessions on fun with dashboards. And you'll have to go over to past events or recorded events, Ken. And under recorded events, on the far right-hand side there, at the top, if you scroll down through some of the recorded events, we actually do have some archived recordings of past sessions. All of the roundtables are there. You can see there's one right at the top with similar to what we talked about here tonight. But as you scroll down, about a year ago, Kurt did a series on fun with dashboards, how to create them, how to take care of them. So again, you can just kind of scroll down and watch for the topic. A lot of roundtables, but as you go down, there's sessions on screening, dashboard diagnostics is also very, there's getting started with dashboards right there on the screen, a couple getting started sessions. So just go ahead and look there for a topic. If you like this form of presentation or instruction, demonstration, you can take a look at that. All right, just a couple other things to clean up questions, and we'll wrap things up.
Let's talk about how we got here once more, Mark, okay?
Go ahead.
We hit the Events tab. If you're taking notes, that's over here near the end of the scroll of the menu bar. And once we hit the Events tab, we went over and hit Recorded Events. And that gave you a really long list that you could scroll through. All of these descriptions are longer than we have space for in the thumbnail, but if you click them, you'll get a much longer description of what we're doing. There's great information on many of these. Those of you that are always looking for the roundtables, where the heck are they? Well, most of the time, unless we really mess up technologically, most of the time they're sitting right back here in past events. They're also on our YouTube channel for you to take a look at if you're on a smaller device or if you're trying to look for it in a different format. How are we doing with questions here, Mark? Anything else?
Just a couple more. Greg Tate asks, is there a way to spread an allocation of money if you wanted to control the portfolio by percent? You kind of demonstrated that with the watch list dashboard. You just demonstrated. Is there a way to do this through the worksheet? Probably not exactly what he's thinking of. He's trying to work by percent. That is something I don't think I'm speaking out of turn here that Ken and I have talked about, both share denominated and dollar denominated and percentage denominated investments on a dashboard, especially in the worksheet mode with Kurt. So we'll be looking at that stuff as we go through the next design change.
We really appreciate you sending us ideas that you have, things that you'd like to see. Sometimes something sounds very simple and it's really kind of complicated to do, and sometimes something that sounds really complicated, Kurt says, well, I can do that immediately, and bingo bango, it's done. So don't be afraid to drop us an email or send us a message, and we'll do our best to make these things responsive to the way you actually use them. That is a nice idea, and you're right, Mark. We have talked about it before, where I could say, I want to make this 5%, and it would tell me then how many shares I had to make that happen.
Yeah, and I think that's probably simpler than I thought it was, so we'll cross our fingers on that one. And Greg does say that, yeah, we're talking about the right subject here as far as fixed allocation. Greg Horning asked the question, could you recap where the projected annual return number, the par number, comes from each stock? Not going to cover it tonight, other than to say that we're basically taking the current revenues or sales, escalating them at the growth rate shown here. You see fresh market up at the top, escalating it at 13%, applying the net margin thing. Again, it shows up on every page. In fact, Ken, go ahead and click through on the ticker symbol. All of the assumptions are shown for any one of these, and under the expected income statement, you can see where the inputs and the outputs for the calculation are. He also asks, is it the value line low total return? No, it's not, but we have made the point that quite often, especially on a fairly stable, consistent stock, the value line low total return forecast will very often resemble the projected annual return.
Yeah, I think it's useful to note that we're more different than the low return when we're looking at a fairly small company, or when we're looking at a company with very little history to it. Then you'll find some discrepancies, sometimes some major discrepancies. But as the company gains history and some consistency, it's amazing how close we get on a well-prepared SSG, how close we get to that low total return on a regular basis.
And that pretty much does clear the questions, so we'll go ahead and stick around for a few minutes, but I'm going to go ahead and shut down the recording. Thanks, Ken, very much for the tour of the Wolves process tonight and demonstration of the sandbox. Thank you very much.